Gold futures jumped to an all-time high with April futures hitting 53.45 early on Wednesday after breaking through $5 an ounce earlier in the week. This is with the February futures contract, which is due for first notice date, rising to 53.06 an ounce. Now silver futures rallied up to 116.16 in early trading in a very volatile trading session, with prices still below its all-time high of 117.70, which was hit on Monday. The recent moves in the precious metals can be attributed to some of the heightened geopolitical risks and the broader move away from the US dollar, with futures falling to a 4-year low in the US dollar index. Now gold has now jumped over 90% in the last 12 months, with silver up over 265%. The dollar extended its recent drop on Tuesday after President Donald Trump told reporters in Iowa that he was comfortable with the recent decline in the value of the dollar, further giving a boost to the gold market. Now, later in Wednesday's session, we saw Treasury Secretary Scott Bessent walk back some of these comments here, causing a reversal in prices for a short period of time. Now, the Federal Reserve, they're widely expected to hold interest rates steady later in the day, while adding to the narrative that BlackRock's Rick Rieder, who favors aggressive interest rate cuts, is now seen as the leading candidate for the next Fed chair. The next Fed meeting after today's will be on March 18th, where there's only a 15% chance expected of a 25 basis point interest rate cut. Now, volatility continues to surge across the industrial metals complex, with silver, platinum, palladium, and copper all rallying on the session. Structural deficit and supply squeezes are what's fueling the silver market, with a 5-year structural deficit where demand far outpaces the supply. This has created a deep backwardation, signaling an urgent need for physical metal in the front months. Now, copper futures are experiencing a slowdown after the recent rally, with a combination of weakening short-term demand in China, high inventory levels, and a correction following a rapid speculative-driven surge. While long-term structural shortages exist, immediate headwinds include some softer manufacturing data and the potential for material substitution, following a shift from a supply-driven rally to a more cautious demand-concerned market.